Big tech stocks mixed to end the week after powering gains in the last several trading sessions. The relief rally coming after President Trump signaled that he could ease tariffs on China. Joining us now with more, John Chambers, JC2 Ventures founder and CEO, also former Cisco executive chairman and CEO, as well as Yahoo Finance executive editor, Brian Sozzi. Thank you so much for being here with us this morning, John. Talk to me about where the tech sector is heading this year. If we fast forward to Jan 1 of 2026, what are you telling me?
Well, I think we've seen during every opportunity and every challenges for the last 30 years, the tech sector always comes out on top. And I think the segment of the tech sector that ends up on top is the one that can be agile and flexible, both large companies and smaller. You saw that with Google's results, which were very solid. I think what that company's doing, and Thomas Kurian in particular, one of their top leaders, is doing with AI, is an example of that. So I think you'll see the tech sector on top in 26, 27, and 28. Brian, as we discussed before, it will be the decade of AI. And you will see literally deglobalization of the tech industry. We predicted that on your all show 3 years ago. You will see many of us, and I moved away from China 5 years ago, so I focused outside of China in terms of my key interests. But key takeaway here, bet on the tech sector every time. Will there be some train wrecks? Of course. But if you really look, AI will drive every company from a productivity, earnings perspective, and drive our market and our standard of living.
John, always great to see you. Look, I put this question to Treasury Secretary Bessent last week on, can Apple make iPhones in the US and do it profitably and actually sell these things to consumers? He seems to think so, which I understand his position, but what say you? Can Apple move its production out of China? I mean, the company spent decades building it up there so they can profitably make an iPhone. Like, what does Tim Cook do, and can they make these products in the U.S.?
The answer is yes, yes, and yes. In terms of the approach, you just saw an announcement today about Apple saying they were going to be making iPhones in India. And if you look at the most strategic partnership to the U.S. over this next decade, it will be India. They tease about America and India being AI. Modi said that very directly in terms of the opportunity. So I think you will see iPhones being made in India, less in China, and you'll see iPhones being made in the U.S. and strike the balance on it. So I think this is one where you will see us get very close to key allies. I think the most important strategic partnership we have in the world is with India. And I think you'll see them lay the groundwork for a good working relationship in resolving the tariff issues effectively. So in your earlier comments, you talked about South Korea, a little bit about Japan. I'd really watch what occurs in India. They clearly would like to make this a win-win, and they've shown great flexibility. And our two leaders in India and the U.S. get along great.
John, you and I have been talking about India for, I would say, since 2014. I mean, you were early in that country, laying a lot of the tech infrastructure there when you were at Cisco. What would India getting Apple iPhone production mean for India? And then should investors think of India as the next China in terms of manufacturing?
I think investors should think of India as the next China in terms of outsourcing to manufacturing, but with a dramatic different relationship with the U.S. India and the U.S., the largest democracies, will get along great. They'll find a way, and we'll find a way to make it a win-win. If you look at the plan for the economy in India, it was driven by Prime Minister Modi, who's a good friend. And disclosure to your audience, I'm the chairman of the U.S.-India Strategic Partnership Forum. And Modi teases me about being his global ambassador. I had the honor to meet twice this week, earlier in the week, with the finance minister, Sitaraman, who's just amazing, very much focused on the partnership with the U.S. And she was headed to Washington to work on the trade agreements prior to the terrible events that occurred in India earlier. So I think you will see India become not just the most important U.S. ally, it will become the largest economy in the world over the next several decades. And I think U.S. and India will grow dramatically faster together than we can by ourselves. So outside of the U.S., my number one bet is on India. My number two bet is on India in terms of that part of the world.
John, it's a fascinating overview, obviously, given the expertise that you bring to the conversation. It does make me wonder how you're thinking about the United States' relationship with China right now. I keep saying every night I go to bed and President Trump has said he's spoken with Xi Jinping, and then I wake up and China says, no, we have not had conversations with the White House. Where does the China question mark leave you in terms of your outlook? Where do you see it heading?
It's a great question. And your all show 4 years ago, I shared with you that I'd encouraged all 25 of my startups, of which I have 11 unicorns, 3 companies have gone public. Pretty good track record over the last 4 or 5 years. A little bit lucky, but I'll take that anytime. I was the original big high-tech backer and moving to China in 1995. First major decision I made as a CEO was to move my manufacturing to China. It was a win-win relationship. Under the current leadership, and beginning about 8 or 9 years ago, it became a win-lose at the expense of the U.S. And so that's when I quit investing in China, doubled down again on India, and focused on whoever leads in AI, and their associated alignments will occur. Will we eventually get back together? Yes, but I think it'll be a long, challenging direction on it. So
Yeah.
I'm still giving the same direction to my startups. We're staying out of China. If I didn't already have a major presence there as a company, I would probably avoid it for the time being.
John, it's a fascinating answer, and especially given the market action right now. The big concern before these tariffs were even in the room was whether or not China was going to become the AI player of the world, obviously utilizing DeepSeek. We've heard news over the last week that they're utilizing DeepSeek in governments and hospitals. How do you weigh the risk of China's supremacy on AI versus some of the U.S. tech names having a longer runway?
Well, I think AI leadership, almost dominance, needs to be the top priority of the U.S. I'd like to see the administration and both political parties embrace that. I think we can get that leadership much quicker by working very, very closely with India, where they graduate 1.2 million engineers per year, and we only graduate 60,000. Most companies that I invest in have a major presence in the U.S. and India together in terms of the direction. I think China missed its window. 5 years ago, I would have said China was positioned to be the tech leader in the world. They took away innovation, started using their 5-year programs, of which I've seen 8 of the 14 occur, to say from a top perspective, here's how you're going to operate with innovation. And they took their leaders in tech and made them take a back seat. So I think they missed their window. I think if the U.S., and especially if the U.S. and India move well together, we will get that leadership. And you see a lot of that leadership in U.S. technology in India and diaspora, and companies like Google, Microsoft, IBM, Adobe, et cetera. And out of my startups, probably half of them have founders that are part of the Indian diaspora. So I think we're going to lead in this. I think the economy's 2 to 3 decades out. Number one will be the U.S., and I think actually China missed that window in technology leadership as well. They'll be a tough competitor, but they don't play by the same rules. And so to me, trust is all about where you put your investments. That's based on track record, relationships, and trust implementation.
John, I've been surprised by some of the commentary from tech earnings this week. IBM didn't really sound like they're seeing a pullback in software demand. Heard the same thing from ServiceNow. Within your early stage tech companies, a lot of them focus on software. Are you seeing any pullback or slowdown demand?
I think the good news is I follow those numbers very closely, Brian, as you know, across all 24 of my startups. The minute the tariff issue was announced, in the next 24 years, we did contingency planning across all of them. Classic prepare for a slowdown, but then position yourself for the upturn that follows it. I think you're going to see, Brian, that tech will emerge as the way you come through this transition, but you may see dramatic changes in which groups lead from tech. You mentioned 2 very good companies. What Arvind's doing at IBM, I think, is very creative. What Bill McDermott's doing at ServiceNow is very creative. We talked about Google earlier, Microsoft. In terms of my startups, the average one is growing over 40% year over year. We've not noticed a measurable change in orders, but the sales cycle is going out. It takes more signatures to get things approved. So we're anticipating that we could see demand in my startups, which are growing, let's say, at 40 or 50%, slow by 10 to 15%. And what we're doing is saying, what new things do you do creatively during this time in terms of geographies, industry, strategic partnerships to make this happen? All my companies now are AI. If you're a tech company and your foundation is an AI, you're probably going to be history. And will there be some misses on that? There absolutely will. But just to share numbers with you, a hot startup, Safe Securities, led by Saket Modi, he's growing year over year at 100%, 3 years in a row, and his headcount is decreased. They are driving productivity at 100% per year. If the U.S. businesses, regardless of whether they're a tech company, manufacturing, et cetera, drive productivity at 7 to 9%, and you bring that to the bottom line, you know what that means to stocks and multiples. So I think AI will drive this direction. Are we going to see a little bit of slowing in orders? I think realistically you will, especially the international orders where, and there's a little bit of friction now between the various countries on trade. Yeah. I think we'll navigate through this. I'd watch the countries that you said earlier about getting a program here, but I think it would be unrealistic to think that we won't see a little bit of slowing in orders. And if you're going to see that, you've got to say, what are you going to do to increase your pipeline so that doesn't show up in your bottom line? Does that make sense?
It certainly does, John, giving us so many headlines for our audience to monitor amid a very uncertain situation. Thank you so much for making the time for us. And thank you, of course, to our executive editor, Brian Sozzi, for bringing us the conversation. Appreciate it.
It'll be an honor. 5 years in a row, we've called it right every year. Let's see how well we do together this year.